Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we are going to be talking about AMC stock itself. I am still bullish. I wanted to make an update video on the last update. We definitely jumped the gun a bit on the entry, but everything is still set up absolutely beautiful for AMC. And the way that I actually approach AMC, I don't even necessarily look at it as an AMC stock. I look at it, and some people will disagree with this approach, but I look at it as almost like a leveraged SPY. And the reason that I say this is because we have seen dips in AMC when the SPY came down. December 2021, when we saw AMC finally break out of the bull flag to the downside. That was in correlation with the sell-off in the S&P 500. The last squeeze that happened in AMC, exact same thing. There was a bear market rally. AMC, GameStop followed suit. Right now, we are seeing the SPY break out to over 400, and we're starting to see some more bullish momentum, albeit there being a recession as of today. So with that bullish momentum, which I believe should be carrying through within the next 2 weeks, again, another unpopular opinion of mine, but I'm bullish on the S&P 500 right now. With that being said, I do still expect some squeeze action out of AMC stock, and I think we do end up seeing new highs higher than we saw on the last squeeze. And right now, we are seeing an absolutely fantastic entry point. So, if you guys enjoy this content, I highly appreciate the thumbs up on the video. Subscribe to the channel if y'all are new and you want some more updates. We also have a bonus stock that we will be covering at the end of the video. Another short squeeze stock, highly manipulated. It should be a fun one. I can't wait to share that one with you guys as well. But with that being said, let's just jump right into today's video. Now, remember to smash that like button, but also if you wanted the free 15-day trial of Hootmoney Trade Alerts, it's that first link in the description, first link in pinned comment section down below where you get to see all of my buy and sells. I give you guys trade ideas as well, and I like to educate people. That is down below, but let's jump right into it. So, the 12-hour chart right here for AMC is looking pretty incredible. It is breaking trend right here with some EMA crossovers, but we are still overall in green money flow. Both the RSIs are pointing up, and Market Cipher, which is the technical analysis tool that I use, is showing a nice green dot. AMC also right now has very low volume, so this sell-off was on very low volume. The last rally that we saw had much higher buy volume. So if we just get some more volume on AMC, potentially leading up to earnings, there could be a very, very large rally. Now, what you see on my chart, which actually predicted the perfect resistance right here, are spider lines. So spider lines, I don't think anyone else uses this, but I do find that they work particularly well with AMC. And essentially what you can see right here, their point of reference is where the price action doesn't necessarily bounce off of, but it likes to stick to it. So you can see right here, it sticks to the spider line. Even right here, it sticks to the spider line with a few wicks coming out. Right here, some resistance, right? So it's not supposed to be perfect resistance or support, but price action should more or less fall between those lines, and that's actually something that could have been used to predict the top of this run right here. And we'll obviously be looking right here to break out, form some new highs with some higher volume. So we can get into some other time frames here. Daily chart also looking fantastic. We're finally not in this overbought territory. Market Cipher has red money flow. It's been having red money flow for pretty much all of 2022, but now the daily chart is right back into that green money flow again. We haven't seen green money flow on the daily chart in AMC since literally November of 2021. Not even a glimpse of it in 2022. So with that money flow crossover right here, and we are seeing the VWAP point up, which is that yellow right there. If the VWAP crosses over the 0 point, which is right here, that will print a green dot signal for AMC, which means that momentum is changing to the upside and we're getting that red to green money flow. This is a really good spot to be going long on AMC, especially after yesterday or the previous big dip. This is that second chance. This is what I believe will be the dip before the big rip. Now, this daily chart did give a red X yesterday. That's a short sell signal, but I'm going to just override it with how amazing it looks down here. This happens a lot. I mean, you can see right here, it gives a short sell signal. It's literally the bottom. So I'm not taking that into too much consideration right there. Even things like the 4-hour chart still showing some upside, even though it did get met with some selling as soon as we pumped earlier today, but still 1-hour chart, the EMAs are starting to cross over, flip more bullish. We are gonna probably experience some consolidation before the next rip. However, it is looking up for AMC, so I really do like this chart right now, and that's honestly why I wanted to make the video. S&P 500 is moving to the upside. I do believe we're going to get that bear market rally, and AMC is still oversold and set up very, very nicely. So I wanted to follow up on my last video and make this one. The thesis is still the exact same. I mean, AMC is still absolutely juiced with the cost to borrow hitting all-time highs, slightly coming down off of where it was, but still at a very, very high historical value. Short exempts have been through the absolute roof over the past month in AMC, some of the highest short exempts that we have ever seen, especially since the rallies back there in 2021. And then also the all-time high worth of failure to delivers. Super, super interesting. Again, rivaling what happened in 2021 right here, right now. That all happened in June. So it is all looking good. We're still at 100% utilization. Everything is set up perfectly on the Ortex data. I don't really need to give you guys a huge update on that. We can get into the flow for AMC, which is definitely looking slightly bearish. Now, AMC typically does have a very bearish flow, as it is something that is heavily institutionally shorted. So big money is always shorting AMC. They're always just pushing money into these puts. I'd like to see it obviously a little bit more bullish during the beginning of the day. It was a lot more bullish when it was in fact running up. That is not the right chart right there, but when it was running up as of this morning, the flow was looking more bullish, and it's honestly just following price action more or less with where the calls and where the puts are flowing out. I'm not an expert on AMC flow analyzation. However, what I can tell you is that it's mostly institutional, it's mostly hedging, and they're just gonna, short every rip. Wrong chart again. Short every rip and buy the dips as well. So that is what I'm looking at there. We can get into the historical flow breakdown. We are at pretty much an all-time low in call option volume at 114. There's barely been any other points in history where it has gotten this low. I mean, even on most days it doesn't get down to 114. The lowest I'm really seeing here is 136,000 there on May 23rd, and that was literally before AMC started climbing right back up again. And then what happened afterwards was another increase in volume the following week. So usually these low volume periods do in fact lead to more volume in the future. I mean, the chart, if we're just looking at that daily chart, super, super, super low volume right now. It is not just in the options market. And that's when this stock might pump. It might be pumping when the most amount of people aren't watching. Guys, that happens way too often, so I had to bring it up. We also have implied volatility well under 125%. Again, guys, right back here, it led to some upside in the implied volatility when it went under 125. Right back here in March, same thing. It goes under 125. It jumped right back up to the upside. Most times when implied volatility is below 125% on AMC, it implies that the options are cheap, and it makes it a better opportunity to go long. You don't want to be going long when these options are already at 200% unless you really plan to close intraday. AMC is currently trading at $14.50 per share And we have a max pain this Friday, aka tomorrow, at also $14.15 per share. It's important to look at some other expirations as well to see where market makers are going to try to pin this. The next monthly expiration has AMC at 16. Obviously, market makers are going to try to pin it at the max pain value. So I do expect any squeeze to obviously be met with some selling pressure, some forced shorting from market makers. Obviously, that's going to happen as well. If it squeezes and if there's an imbalance to the upside, then obviously market makers are going to want to drive it down. We also have a very solid gamma ramp right now with mostly positive gamma exposure over $14.50. So the price we're at right now is where gamma can really start ramping up. And that's probably why there was such a huge amount of movement up here, pushing it well over $15 per share, only to come right back down in super fast pace. And it's likely due to the delta hedging from this gamma exposure. But that also means that any squeeze that might happen in AMC will be pushed right back up to the upside. And if they can sustain buying pressure and not get overtaken by shorts, that gamma exposure will just propel it and give it some extra gamma juice. The next stock I wanted to talk about in today's video was AYLA, or Ayala Pharmaceuticals. This is a stock that has seen heavy naked shorting, upwards of 17% of the entire free float. 2 days ago, it saw 1.1 million short exempts. A short exempt is essentially a naked short by a market maker. It has to be covered within 6 days. I've said the definition so many times. Go look it up if you don't know what a short exempt is. But there was 1.1 million of them as of yesterday. The free float is sitting at only 7 million shares. So if we do a quick 1.1 divided by 7, that gives us about 16%. My estimate was off. About 16% of the entire free float was essentially just naked shorted as of 2 days ago. Just out of nowhere, they just, shit out 1.1 million short exempts. It was the highest ratio to free float in the entire market on that day. It's still seeing a very high number, but obviously not as high as it was. We're seeing the borrow rate right here on Fintel jump up. It was climbing all week, and then today, this morning, we finally see the borrow rate jump up to 145%. There are 0 shares available to short right now. So overall, it's a pretty good setup. The dilution on Ayala is not too crazy. Overall risk is medium. However, you definitely should be careful in terms of dilution because they do have an open ATM. This could mean that holding this thing longer term could be a bit risky. Also, cash need right now is high. But what's important to know about dilution is that the company actually withdrew from an S1 offering. So if we pull it up right here, you guys can see that the company is seeking withdrawal of the registration statement because it is no longer pursuing a public offering of securities at this time. So that means that you probably don't have to worry about it for the foreseeable future. The registration statement has not been declared effective. So the company must have found some type of cash reserves to continue to fuel their operations because they're no longer really seeking a public offering at this time. They withdrew from that offering, and that's what ended up causing this price to spike up in the first place. Looking at the Ortex data, you guys can see that short interest is now being reported at 10% after just a few days ago it being at 1%. The cost to borrow as well was at a super low value, only about 8% right there. Now it is at 357% on Ortex, 40% utilization. Now this is a bit hit or miss of a statistic. Obviously, they're paying a huge cost to borrow right now, so it's hard to find shares, and it is listed at 0 shares available on Fintel. I'm not necessarily buying that utilization statistic. I don't think they have any shares. I mean, why would they short exempt literally 1 million shares 2 days ago if they had shares to short in the first place? Short exempts are way more risky than just normal shorting. So they just wouldn't do that. On July 26th, there was also 33.66 million in short volume. Guys, about 6 times the free float was shorted on July 26th. How does that make any sense? How do you short 6 times more shares than exist in the free float. Like, come on. That's some high frequency trading bullshit right there. So the reason I even bring up this stock in the first place, AYLA, is because I've played these highly short exempted stocks in the past, and usually around 5 or 6 days, you're going to get an uptick in price as these guys are trying to get out of these short exempts and they start to cover them. In the case of AYLA, they have to find basically 16% of the free float. So if shareholders end up owning and controlling that 7 million share free float anyways, what are the market makers gonna buy back? They can't buy it back, and they're gonna have to pay an absolute premium on that, and that's when you can really start to see stocks begin to run. Anyways, my friends, that's about it for the video. I hope you guys have enjoyed. As always, drop a like on it if you guys did. That is my update for AMC stock and AYLA stock. I hope you guys enjoyed. If you guys wanted to join Hootmoney Trade Alerts, there's a 15-day free trial. You can join using the links down below in the pinned comments or the description of today's video. That's all I got, my friends. That's my AMC update. I'll be seeing you guys next time. Have a wonderful day.